Hello, this is Mike Youngman, Chief Investment Officer for Ankerstar Wealth, giving you a week ending July 5th update. I'm going to hit some more market highs in this short trading week, as well as a little bit of a few slides from our third quarter presentation on the state of the economy. But before I get started, I must remind you this is a financial education presentation. You must do your own due diligence on anything that you hear in this presentation. More disclaimer information can be found on ankerstarwealth.com, and the opinions expressed are mine and mine alone. It's been a short week, only 3.5 trading days, but the good news is we continue to hit new highs. So we're starting the third quarter out fantastic. And I'll share my screen. You can just see the headline. Today's the end of day Friday. S&P 500 NASDAQ post record close Friday as jobs report raises the Fed rate cut hopes. And I will say that the jobs report comes out, and sometimes it's the bad news is good news, at least for the stock market. I'm not saying that less jobs or the unemployment rate are going up are actually really good news, because they're not. But when they go up, there's a better chance the Fed will cut rates. And that's why the stock market reacted accordingly today. So, and I'll just show you a real quick graph. Here's the NASDAQ, up 0.9% on a Friday. You would think this would be a slow trading day, almost up a full percent. You can see this graph a year back or year to date, and you can see that it is pretty much straight up. So, of course, this is great, and it continues to go up since the beginning of the year and is up, about 20%. So fantastic there. But I wanted to show you a couple slides from our advisory committee earlier this week. And what I'm showing here is kind of the Ankerstar Wealth and partners that we have. The inner circle are a lot of companies that we partner with, some that are not shown there, but companies like Charles Schwab, JP Morgan, Chase, First Trust, and different Texas Capital, several of them. And then on the outer ring is a lot of our investments. So I can't say that we partner with Apple or we partner with Google, but they're certainly companies that we invest in. And I just thought I'd show you this just because it's an overall team effort, and we count on these partnerships and our position as owners in these companies to make you money and increase your wealth. So when people talk about the economy slowing, or you hear this term, a soft landing, and I had this slide, I thought I'd define it out, what a soft landing is versus a hard landing. A soft landing, when the economy sustains a mild slowdown where consumer and investment spending softens but continues to register positive growth or positive GDP. That's a soft landing. That's what we want. That's what we're getting so far, and the Fed's doing a good job. A hard landing is when we hit a recession. And you'll know it because the stock market will cut back a lot. You'll hear layoffs go up significantly, and companies pull back on their spending. So I pulled this headline from somewhere. So far, the runway is wider and longer than expected. And we're doing good in 2024 to have that slowing of inflation without putting our economy into a recession. Some validation of this, inflation. And inflation is not popular, but slowing inflation is better than what it was even a year and a half ago. It peaked at 9.1% year over year. It is down to 3.3%. What's driving inflation? Two major categories: housing, or shelter, rent, whatever you want to call that, and auto insurance. Those two account for about 60 to 70% of the inflation. The thing is, if you're in a house and you have a set interest rate and you haven't sold your house, that inflation isn't really affecting you. It's unfortunately affecting people that have rent or are buying another house. For auto insurance, if you are, let's say, an older adult without teen drivers like me, yes, your auto insurance probably went up 20%, but that might not be too bad if it's just one or two of you. When you have, for example, 5 people on your insurance policy, 20% increase is quite a bit, especially for like teen drivers. But those two factors are driving the inflation. Another thing that's upcoming, interesting this year, is the election year. So what's the market do? And this shows you that summer rallies are common in election years. And I pulled this from a Carson presentation, and I love it because it shows June, July, and August tend to be good in an election year. September and October, not so much. And June was great, and July is starting off great, so let's just hope that continues. And another slide that kind of shows you the positivity of an election year. The blue line is where we are year to date. Obviously, that's very good. And this is the S&P 500. And the orange line shows you a typical election year. So the top one is all election years, and the bottom one is the fourth year of a new president. And while Biden may not seem that new, he's been around for a long time, he is a new president. So you can see we're exceeding even those best estimates there. So with that, earlier this week, and if you click on any of the links down, we had several different presentations talking about different stocks, how teens can start saving money to invest for the future, and several other topics we covered this week. And with that, I hope you have a great weekend. Thank you.